Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Hello, this is Hall Martin with Investor Connect. Today we're here with Eva Yazhari of Beyond Capital Fund. Eva, thank you for joining us.
Thank you for having me.
So what was your background before investing in early stage companies? What did you do before this?
I worked on Wall Street in investment banking and private equity, and mostly kind of cut my teeth in the fund of hedge funds world. So was allocating larger institutional capital to hedge funds, particularly activist managers. So I was in charge of the ongoing monitoring, due diligence, and reporting on the activist portfolio, which was a lot of fun. Got to see those corporate raiders do what they do best.
That must have been fun. So what excites you right now?
Yeah, and thank you for asking. I'm lucky to have been an impact investor for the past 10 years. In 2009, I left the hedge fund world and decided to use my skills to have a social impact. I have had a tremendous group of individuals that I learned from on Wall Street and really wanted to take the rigor and the process-driven approach to due diligence and apply it to companies that were in need of early stage funding. And so for the past 10 years, I've been extremely passionate about investing in companies that are not only in their earlier stages, seed stages, but also improving the lives of people living under the poverty line. And these are financially sustainable businesses. We are not trading off on return. We have the 27% IRR in our portfolio that we're very proud of. And they are companies that are providing access to basic goods and services to people who earn roughly less than $4 a day. So that's kind of what's gotten me up in the morning for a while. And more recently, I have been thinking about how to take our work to scale, in addition to speaking to a wider audience about impact investing and the power that it can have for somebody in their daily lives, knowing that their money is aligned with their values.
Well, great. So what's your advice for people investing in startups in the impact sector? What do you tell them to do first before they write that check?
Well, there's a lot to do. And I think taking a couple step backs and thinking about what your values are first and recognizing the importance of living according to those values can really help to narrow down where somebody might want to get involved. But then there are also some kind of more investment-oriented tips that I would say. The first is to avoid a company that has positive intentions but is not sustainable. The second is to remember that, like many other investments, you're really just investing in people. The third is to co-invest, to share and aggregate resources. And the fourth is to remain active in your investments, particularly in startups, because that's where there actually can be some value creation. At Beyond Capital, we focus on having strong relationships with our portfolio companies. And that means we're often providing them with access to resources beyond just the capital that we give them, beyond just the monetary investment. And that is often pro bono legal support, financial modeling assistance, assisting with their cap table. But frankly, sometimes that is just being a sounding board or even a shoulder to cry on, because entrepreneurship can be tough and lonely sometimes. And it's part of the business that we try to be very attuned to, is kind of the human side of being an investor.
So on the other side of that table, what's your advice for people that are launching impact startups? What do you tell them to do before they launch that company?
At Beyond Capital, we're very data-driven and very focused on making sure that unit economics add up. As you can imagine, when investing in companies that are selling to customers that are very low income globally, there's often a volume play in that business because margins can be so thin. That being said, we do think it's important for a company to really think through how their mission will add up to a sustainable business, because we want obviously a financial return, But secondly, because we believe that proving that financial profitability is possible with social entrepreneurship is very key to the growth of the industry and to impact investing at large. So my first piece of advice is to really have the thinking around how getting your product or service in the hands of somebody that really needs it is going to add up to a business model, and having that in a financial model that you can explain to your investors. And then the second is to think about problems from the perspective of having simple solutions to complex problems and not the other way around. That's something that we look a lot for at Beyond Capital. One example could just be adding in a technology component to allow access to finance or healthcare products or even renewable energy. Another could be looking for a relatively easily accessible workforce, such as rural women, to integrate into your model. Whereas one might think that might not be a group that could actually help drive sales. And we've seen it really work quite well in some of our portfolio companies. And so those, I think, are the most important points that we often communicate. But the third is to be data driven. I think we're living in a time where there's really no excuse to not know the impact of your business down to very minute level, just due to the fact that we do have technology available to us that is getting more accessible even to small and young companies. And as a data-driven company, I think a lot of things, frankly, just get easier. It's not really investor demand that drives that, but reporting and impact measurement are quite easy when a company does have a very robust data management system.
Well, that's good advice. So let's talk about the state of investing in impact deals. How is the industry evolving? What changes do you see coming up?
Well, we started out 10 years ago really with kind of like a testing ground to see, can we get the evidence that we think we need to grow this sector? And now we're starting to see more innovations in blended finance and different types of capital structures for companies, more the kind of traditional ways that companies perhaps that don't have a purpose have grown. But I think the greatest trend that we're seeing is the integration of purpose and business as a force for good. I have a podcast called the Beyond Capital podcast where I interview purpose-driven CEOs. It's an interview that focuses mostly on their business and how they're integrating social and or environmental criteria into their business strategy. And there is no dearth of companies that are now really looking either at how to pivot their business model or how to start new companies. And surprisingly, many of them that have been integrating ESG for decades. And so that's a trend I see continuing. And as I'm sure you've heard, the B Corp movement really helps to further those goals because it sets a very high standard for what a purpose-driven business should look like. And I think we're all waiting at the edge of our seats to have more accessibility to B corporations, perhaps in the public markets, so that those can become more investable opportunities for a larger investor base.
So let's talk about your investment thesis. What exactly do you look for in a startup that you want to invest in? And what startups fit that thesis that you have so far?
Yeah. Our thesis is to invest in companies that are profitable, that are providing healthcare, energy access, sanitation, agriculture tools, financial inclusion tools, and even livelihood improvement methodologies to individuals living at the bottom of the global economic pyramid in India and East Africa. So we're emerging market investors. But what I really see our thesis as, especially as the world has changed over the past decade, is investing in macroeconomic trends such as the mobile prevalence, financial sector growth, and as well as increase in demand for basic goods and services for people in emerging markets. And those qualities kind of adding up into business models. One exciting business that we have invested in is called Numida. It's a company based in Uganda that believes very strongly that access to capital for small and medium-sized enterprises is stalling the growth of Africa. And we know from a McKinsey report that 77% of the jobs in Africa are created by small and medium-sized enterprises. And this company started out with an app on a smartphone. And as you know, mobile prevalence and even smartphone connectivity is growing in Africa. And it's a way for business owners to track their P&L. And that is not the only means to the end. The tracking tool actually unlocks the ability for companies to borrow capital after 2 to 3 weeks of having data input into the app. And the ability to borrow even small amounts like 60 to 80 to $100 is game changing for entrepreneurs that are really kind of just perhaps not even aware of their P&L, but also really kind of not able to reinvest in their businesses. Another good example is in India, just to give you kind of two counterpoints. It's called Frontier Markets. It's a business that has started out distributing renewable energy products in rural India. We actually, in 2012, had looked at over a dozen solar lanterns. I'm actually looking at one at my desk right now, and decided that we didn't want to make a single bet on a particular product. And so we found this distribution company through the Echo and Green Fellowship. And she's an amazing entrepreneur who's gone on to really be successful. But the business is really just focused on getting products now, mostly household goods, but really focused on lighting and goods that will help improve the livelihoods of a household to rural areas. And it's becoming a last mile tentacle that is also very attractive to larger partners and players like Eva, which the business has a relationship with, and other growing relationships, for example, Amazon as well. And so that's a company that has for 3 years in a row had positive EBITDA. We invested in 2013. It has $2.5 million in revenue. It's targeting much, much more than that by the end of the fiscal year in 2020. And so we're really excited about the growth of that business and how it can expand. And the company's gone to raise its Series B heading into the spring. And so those are two examples, I think, of businesses that really hit on our investment strategy and almost kind of like what we like and what we don't like.
Oh, great. So you deal with a lot of startups in the impact sector. What would you think is the major challenge most impact startups face in launching their business?
I think the challenge for the companies that we see in emerging markets are the silent killers. This is described by one of the founders of Numida, and they include lacking infrastructure, difficulty in the financial sector. So really it's impossible to get a loan, but also most investors in emerging markets are not investing less than $500,000. So how can you actually raise a seed round? And the infrastructure simply comes down to roads, power outages, and then also lagging ecosystems to support young companies, such as affordable legal support, accountants. And so I think that businesses that we see are held back by those qualities. I would overlay, perhaps to give a more global perspective, my own opinion that the labeling of social business sometimes does still turn off traditional markets. I'm not saying it should be in any way taken away from the language that a business uses to describe its mission. Rather, I think it should be shared as an opportunity. Right now, we're living in a time where the global trends are moving in the direction of the lower class of people on the global scale earning less than, let's say, $4 a day. I think there are over 800 million of them in India and East Africa alone. They present a really big market opportunity. And we actually based our investment thesis on a study called The Next 4 Billion that was written about 11 to 12 years ago. And it showed how people living on less than $4 a day spend their money. And so being able to even take that perspective to a company in the US and say, this is an opportunity to do well and do good at the same time, I think would be really compelling to investors.
So you see a lot of applications out there in the impact sector. Which are the ones you think are good immediate opportunities for investors to look at? In other words, what's heating up out there?
If I were an investor, particularly new to this space, I would focus on funds. But if you're asking specifically about companies, I would really focus on companies that are meeting basic needs. And those, are simple things like women's health. We're invested in a company in Rwanda that distributes women's health products. And there's just a lack of availability and also a stigma around women's health that the company is helping to solve. There's also, we haven't found water to be a profitable sector to invest in, at least from the perspective that we're looking for. But there might be some businesses out there that meet those needs as well. But then there's also food security and agriculture demand. We are also invested in a company in Tanzania called East Africa Fruit Farms, which helps smallholder farmers get their produce to a market, such as a hotel, a restaurant, or a supermarket, where that produce can be sold for a reasonable price. And that is simply improving their livelihoods. I think initially farmers were earning $1 a day. So we're talking about $300 a year. And the company has helped to boost their incomes over $1,000. And these are all based on demand for goods and services, demand for food, demand for healthcare services. And so that's really where I would start, is like think simply about what the needs are first as an investor.
Well, the last few minutes that we have today, what else should we cover that we haven't?
I'd like to talk a little bit more about how impact investing can help destigmatize money for certain groups. I think people think that to be an impact investor, you have to have a $250,000 check size, or you have to be an exited entrepreneur, or you have to be a tech billionaire. And this is simply not true. Anybody can become an impact investor by having access to ESG and decades of track record in many funds. While it is true that there is a need to kind of cut through the noise, and there are a lot of funds out there that could be green, blue, pink washing their strategies just for the purpose of marketing, there are a number of genuine opportunities for public market investing and impact investing. And so that's very dear to my heart, is helping individuals understand that if you have a 401k or a small savings, or you are looking to start investing for your children, impact investing is a great way to also open up the conversation about money in your family. It opens up the conversation and destigmatizes money for women to be able to talk more about the returns of their capital. And I think it also helps individuals of lower income understand that there's more to investing, that investing isn't just an elite activity and available to people of wealth. And so that's really important to me. I've launched an online magazine to help expand knowledge about impact investing and break assumptions and shed light on this space, because I do think it's for a wider group than has been engaging in it over the past 10 years.
Well, great. So how best for listeners to get back in touch with you?
Yeah, so I can be found on Instagram at Conscious Investor. I can also be found at eva@beyondcapitalfund.org. I'm happy for any personal emails, as well as the internet. You can find Beyond Capital Fund at beyondcapitalfund.org.
Great. We'll add those to the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thank you so much, Hall. Take care.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.